hear the word finance, what's the first thought that crosses your mind? If you're like 99% of people are entrepreneurs, the thought of having to look at or deal with your numbers brings fear or dread. Let's be honest, finance has never been a sexy topic. Most hate having to deal with or even talk about their numbers or finances because they're often viewed as scary, confusing, confronting, or just plain boring as batshit. Here's the thing. Finance doesn't have to be overwhelming or intimidating, and it can actually be quite a fun and stimulating topic because making money, becoming more successful, and creating more wealth is vital if you want to build a thriving and sustainable business and/or provide a strong financial foundation for your family. I created Financial Foreplay back in 2009 as a way to demystify finance, and I've been using my proprietary methodologies and strategies based on science to make complex financial concepts accessible to everyone. I want to give you the knowledge you need in order to become even more successful at growing your business or building real wealth for your family. And I'm also going to introduce you to some global experts so that you can learn from the best. And we're going to be speaking with some trailblazing individuals and entrepreneurs so you can really benefit from their stories, challenges, and triumphs. Financial Foreplay is a registered trademark, which is why there is only one Financial Foreplay, and you should only ever strive and settle for the best. It's time to slip into something a little bit more comfortable, because we're about to dive in and begin.
Can you keep my secret?
We've all experienced the feeling at some point in our lives, the panic that sets in when you get this quote for an unexpected car repair, maybe dental surgery, or even a broken refrigerator. I bet the first thought that probably came to your mind was, how in the hell am I going to pay for this? Now, for some of you, the past 12 months may have resulted in you, or maybe even someone in your family, losing a paycheck or having a sharp decline in their salary, even if it was only for a short period of time, perhaps during a lockdown. What this experience has highlighted is that the overwhelming majority of households and businesses do not have an adequate safety net. In fact, most had less than 30 days of cash reserves on hand, and a recent study, which I will link to in the show notes, revealed that 21% of adults have $0 set aside for their retirement. Now, how would your life be different if that unexpected bill didn't cause fear or panic? What if you could pay the amount without even thinking twice, and instead of a major upheaval or an emergency, it barely registered on your radar as a tiny hiccup? That sense of relief and confidence has a name. It's called financial freedom. Now, it's going to look and feel different to every single person, but it's so much more than just being able to afford and pay for emergencies. It includes knowing that you don't have to worry about your retirement, and it could also mean the freedom to quit a job you don't like to do something that you do love, spend more time with your family, or just do something that fulfills you. Now, I'm really excited to have Gigi McGinnis with me today. She's a regional vice president with Primerica, which is a very well-known company in the US and Canada in particular, and she's going to be our expert guest today. She was raised in Atlanta, Georgia, by a single parent, and I think this really influenced her career choices and her values around money significantly, and I want to dive into that pretty deep. So Gigi, first and foremost, welcome today to the podcast. I'm really excited to have you here.
What an honor to be able to speak to you guys and share my personal story. So I was raised in Atlanta, Georgia by a single parent, and my mother taught me to do well in high school, go to college, get a good job, and save my money, which I did right the opposites. However, I did graduate high school. I got married, and then I landed a job at CVS Pharmacy as a pharmacy technician. What I quickly learned was I could not climb the corporate ladder without a degree. So I went to pre-pharmacy school and then pharmacy school, and basically graduated college as a glorified real estate agent. I chose real estate because I wanted to be my own boss. I wanted to pick and choose my own hours, and I wanted to make a lot of money. I stayed at the pharmacy for 22 years, and I've been in real estate almost 20 years. But with both of those career choices, I had zero time freedom. I was working 8 days a week. I was part of the real estate crash of 2008, and I lost six figures overnight. And I was forced to go back to work for the federal government selling foreclosures in 2 states. All that meant for me was I had to work 3 times as hard for the exact same money. Life kept punching me in the face. In October 2015, I got a phone call, and my mother had been diagnosed with stage 4 cancer. At that point, I had no option but once again to walk away from a 6-figure income to come home to take care of my mom. When I did that, I was like most Americans, I wasn't prepared financially. And I was looking for an opportunity that I could do from home, very part-time, and make money. And that's when I discovered the company Primerica. And all I heard when I was introduced to the company was through 5 to 10 people and their referrals, I could become a regional vice president in 4 to 6 months and make 6 figures. So I quickly saw a way to get my 6 figures back and stay at home with my mom.
Well, that's a really inspirational story. And I think one that will probably resonate with a lot of listeners who are hearing you tell it to them right now. Now, what do you think were the 2 key values or beliefs about money that you learned growing up that led you to being in a situation where you didn't have a strong emergency fund or the money that you needed to retire at 65, despite the fact that you earned a 6-figure income?
Well, growing up, I did not come from money. Mom worked 2 or 3 jobs, paid her way through school. I thought people that had a lot of money was from a different planet, really. We were in the category, we lived paycheck to paycheck. So I didn't really know what money was. And I thought people that had a lot of money, they were, like I said, from a different planet. So when I graduated college and built my business and was making 6 figures, I didn't understand money. Mom always told me to save money, but I didn't understand money. I saved some money, but I was set up to fail. And it wasn't that I planned to fail. I just failed to plan because I didn't understand the value of money. Honestly, I thought my mom had ATM attached to her forehead, right?
So when you say that you were sort of set up to fail, what do you mean by that? Sounds like there's a story behind that. Could you tell me more?
Well, 76% of America lives paycheck to paycheck, and all business owners are one day away from a different life. I mean, think about it. Most business owners, especially when COVID hit, 30 million people lost their jobs. A lot of businesses closed because we don't have the capital that we need to function, right? So I was set up to fail because I was going to work 36 years in retail pharmacy and course work forever in real estate, but I didn't save enough to retire and live the life that I wanted to live. So what I meant by failure is I call it the 40-40-40 plan. Most Americans work 40 years of their life, 40 hours plus a week to retire broke. And that's what I was set up to do.
So how did you go about changing or reframing your mindset?
Well, finding Primerica, getting the right education, seeing how to take my money and make money. That's the missing nugget that I made a lot of money. I spent a lot of money. I was not saving in the right places. So the education was the key factor to me. The rule of 72 changed my life.
Can you, just for those people that might be listening that maybe they've never heard anyone talk about this rule of 72, can you explain it?
Yeah, absolutely. So the rule of 72, you can Google it. It's called the banker's rule. It's just a simple calculation that shows you how to take your money and have your money double over a period of time. It's been in existence as long as money's been in existence. It's just a compound interest invented by Albert Einstein, but it's just not taught. And there's a reason why it's not taught. So the rule of 72 is you take your interest rate where your money is sitting, you divide it into 72, and it tells you how many doubling periods you will have. So for an example, if you had $2,000 to put into a 3% account, 3 divided into 72 is 24. So every 24 years, your money doubles. So you start out with 2,000 and 24 years, you have 4,000. Total of 48 years, you have 8. But if you take that same $2,000 and you put it in a 6% instead of 3, 6 goes into 72 12 times. So your money actually doubles every 12 years. So in 48 years, you actually have $32,000. But where the magic happens, and a lot of people don't even know about a 9, 10, 12, 13% returns. But where the magic happens is putting that $2,000 into a 12% account. 12 goes into 72 6 times. So your money doubles every 6 years. So in 48 years, you would have $500,000. And that is game changer at retirement if people have $500,000.
Absolutely, especially during the times that we're in right now, when the interest rates over here in Australia are at all-time lows, record lows for the century, where people aren't making any money at all having that money sit in a bank account. They might not even be earning 1% interest on it. So where you put your money is important, isn't it?
Yeah, absolutely. So, I was taught to put money in a savings account and a CD, even have some stashed away in a mason jar at home, right? Just for hard times. But, money doesn't care where it sits. Money can be anywhere. But what we better care is where our money's sitting, because here the return on a savings account here is 0.003. And if you do the math, if you divide that into 72, that means every 4,000 years, your money doubles. Well,
most of us
that
aren't going to
doesn't,
live that long, are we?
yeah, but that doesn't work for us, but it works for vampires and banks. And let me show you why. Because banks take our hard earned money and they put it into those 9, 10, and 12% accounts, and they leave the money there. So when you reach retirement age, you go get your money and they make money off of your money. So that's why the rule of 72 isn't taught. That's how the rich get richer and the poor get poorer. But it's just an education process. And that's my passion, is to educate everybody.
Yeah, and this affects a lot of people, doesn't it? I mean, I think it's probably not well known, but during COVID, most small businesses had less than 16 days worth of cash sitting in reserves to actually weather a storm. And most households wouldn't be that different. And that's just simply not enough, is it?
Absolutely. And statistics say, 85% of America even hates their job, right? And 76% of people live paycheck to paycheck. But you look at over 90% of the people are one paycheck away from total devastation. Losing their houses. So when COVID hit in March, people started losing their jobs. People were furloughed. People were laid off. Businesses shutting the doors. Even still today, there's businesses that's going under, right? They can't afford to stay open. And the ones that are staying open, they have a lot less staff. They've learned that they can make more money with less staff. So people are hurting financially, but it's all in education. You could take your money and make money. There's $1.7 trillion sitting in banks right now that people are retiring, especially the baby boomers, right? They are retiring and they're like, where's my money? They don't, it's just an education process.
Why do you think people are so bad at saving and so many people are living beyond their means? Do you think it's a relatively new phenomenon?
Absolutely not. People's always lived above their means. And, they always say the more money you make, the more money it takes. And that was my case. I was making over $250,000 a year when the real estate crash happened and the banks happened, the bank crash happened. And I lost 6 figures overnight, but I saw it coming. So I was a little bit more prepared. And I went back to work for the federal government. But when mom got sick in 2015, I was not prepared. I was not prepared to once again walk away from a 6-figure income. But just like a lot of people, we don't have a choice. And when things happen in our life that we don't have a choice, it's devastating.
The other thing that really resonates with me about this discussion, and it might not be directly obvious, so there's quite a major phenomenon going on in the world right now where we're moving from a world where we have paid to own things to a world that is becoming much more subscription based. So we've got, the Ubers where, people are not holding as many vehicles as they used to, and they're taking Uber. And Uber doesn't own any vehicles. They only, lease out the right for people to be transported. We see that with Airbnb. We see this whole transformation where industries are completely changing from being paid for products and services to being paid, I guess what you might want to call annuities or subscriptions for people to subscribe to be part of that, company. Even Porsche was one of the very first auto manufacturers in the world to offer subscriptions. So when you subscribe to Porsche, you don't actually own the car, but you own the right to drive a car, and they will deliver whichever car you want to drive to your house. How do you see that phenomenon kind of playing out right now with people's income? Because most people have to work for, a certain amount of time in order to earn their salary. But I think what you're advocating with what you do is you're earning some portion of your salary as an annuity, right? It's tied to trails and that sort of thing. Am I correct?
Yeah, absolutely. So I think with COVID has really changed the world in a lot of perspectives, like the way people do business, the way we communicate. So in my business, the system's in place. Like we don't have to buy any products. We don't have to have any overhead. We don't have to have all of our license and education. Everything's paid for, not only for us, but we can bring in as many agents as we want. And their licenses, education, state boards, and all is covered, as well as all of our errors and emissions insurance. So the new way of doing business, it's just a distribution model. And a lot of companies are going to that, just to the liabilities. And like, that's why Primerica is so successful, because we didn't have to change anything. Like, our system's in place. And only thing that we had to change is we had to adapt to a new way to talk to people, because we're tied first place for kneecap to kneecap trustworthy financial companies by Forbes magazine. But now it's Zoom to Zoom. I mean, it's a whole new way of talking to people. So with technology, the way the world's changing, I was just in a real estate closing yesterday, and I asked the attorney, I said, so when are we all going digital? I mean, we sign everything electronically. I'm like, why do we even need an attorney? And he goes, well, it's coming to that. Everything's going to electronic, but thankful it hasn't, because I need a job. But I think the way the world's changing, everything's going to electronic. And with my job, I'm able to build a business with, like I said, with no liability, no overhead, no business expense. And I get paid passive residual income. I get paid overrides. I get paid earns. We get free stock with a company. So free enterprise system is amazing.
Yeah, that makes a lot of sense. Do you have any statistics about life insurance and income protection insurance? How many people out there right now are completely unprotected?
Well, 85% of Americans don't even have income protection. And the reason why I call it income protection is because I can't bring someone's life back, but I can make sure that income doesn't leave that household. So I call that the theory of decreasing responsibility, or, buy term and invest the difference. That's what my company was founded on. But you have most households, you have young children at home, you have a mortgage, you have debt. And if my husband doesn't come home tomorrow, I lose 6 figures of income. So I have to make sure I have that income replacement in place in case something happens. That income never leaves that household. But with 85% of Americans not even protected, most people that I sit down with, they say, I have it at my job. But what people don't understand is if you're furloughed or if your hours are cut, you don't have life insurance. And then if you have group coverage, you don't own it. Your employer owns it. I just sat down with a family this week, and they're getting ready to retire. They were under the impression they could take their benefits with them. They can take their benefits with them, but it converts from group pay to private pay, and it's going up to $1,700 a month. And they were not financially prepared. So right now they cannot retire. They have to work 5 more years.
So, what are the implications for these people? There's 85% of people out there who don't have income protection, and then one person loses a job, or heaven forbid, somebody loses their life. What ends up happening to these people? What is the result of them not taking care of this ahead of time?
Well, I can just refer it to a client that I helped. So I sat down with them and showed them how to pay their 30-year mortgage off in 9 years. And as I was speaking to them, I realized they didn't have life insurance. And so her husband was like, we don't need life insurance. We're cash insured. I already have burial. So, but what happened? We didn't know he was going to pass away so soon. But what happened with them being underinsured, I had to turn around and sell all of her assets. I had to sell her house. We had to sell her car, the boats, the motorcycles. And people don't realize how devastating it is. I mean, it's hard enough to bury your loved one, but then to have to uproot your children, sell out everything, and the mom had to go work 3 jobs, it's totally devastating. My life insurance, I mean, I tell everybody, you can't, it's cheaper than buying a latte a day.
It protects your future for a long period of time. A latte only lasts for minutes.
Yeah, I mean, I tell everybody, I'm building a legacy for my family. If I die too soon, I have enough life insurance to where I can leave a legacy for my family. If I outlive my life insurance, I have a legacy build for my family. I mean, I am breaking generational curses. And that's what people don't understand is you have to leave a legacy.
And even if it's not about what happens after you die, it's about the lifestyle that you're able to enjoy in your golden years.
Yeah, and that not only that, but what about your children? I mean, if you have young children, they still have to go to college. They still have to have cars. I mean, that you still have responsibilities whether you're here or not. And GoFundMe, I mean, it's devastating having to bury a loved one, but having to raise money to bury a loved one, it's total devastation.
GoFundMe isn't a retirement planning option.
We see that all the time here. People setting up GoFundMe's to bury their loved ones or GoFundMe's to help feed the neighbor that lost a loved one. So, but no, it's not a retirement option. It's just a way to raise money for somebody.
Yeah, fair enough. So, what are your top three tips that you would give our listeners in terms of setting the right foundation to achieve financial freedom? What do you think are the three highlights?
The three things that I preach the most on and teach is number one, get your family properly protected. Do a financial plan to become debt free as soon as possible and save for retirement. The sooner you start saving, the better off you are, but it's never too late to start.
So, obviously, what do you do in a situation where someone hasn't saved anything? Because I think the stats were in that study that 21% of adults have $0 set aside. So, what do you do with someone who has saved nothing? How do you get them to turn that around?
Well, we have several options. The ones that I use the most is, what if I can show you through 5 to 10 people and their referrals how to make six figures in 4 to 6 months? So I can show you how to create additional income. I can show you how to take as low as $25 to $50 a month and invest it in a 12%. And some money's better than not having any at all. So, you have lots of options, but we run across that a lot where people are 50, 60, 70, and they don't have any money saved at all.
Yeah, which is very dangerous. It's unsafe.
Very unsafe because we're all one day away from a different life. Like, my mom was not prepared to be diagnosed with stage 4 cancer. I mean, she was still working 40, 50, sometimes 60 hours a week. I mean, she was unaware she had cancer and, she was in the hospital 280 days. And when the doctor looked at me and said, there's nothing else that we can do for your mother, I was in a position to write a check for 60 grand and I saved my mother's life. She's in remission and part of my business today. So, money gives you options.
Yes. And I think that's the important thing to remember for everybody that's out there right now is if you're in a situation where you don't have options, that's the most dangerous place that you can be. And money doesn't buy happiness and it doesn't necessarily buy good health all the time. I guess in your case, it did because you were able to pay for some special treatment for her. But, it's about how do we figure out when we're planning for our future how much income protection we need, how much we need to save. And do you think that most people are kind of winging this on their own, or do you think that they're actively going out and seeking advice from people like you to help them actually do it correctly?
Well, and a lot of people don't know where to go. And then a lot of companies require huge amount of money for them to even sit down with you to talk to you about your financial plan. My company, we actually do financial planning for free, and you don't have to have any money. We can show you how to create money. But like you said, money doesn't buy happiness, but broke doesn't buy anything, right? And so you have to, you have to sit down and talk to somebody and get educated if you don't know. But like you said, most people don't know where to go. Most people are so strapped financially that they can't even save. So when you don't have any money saved, you need life insurance. That's a non-negotiable, because you got to protect your assets and family.
Look, and I think the one element that sometimes gets overlooked is that if you don't have a lot of money, that creates a lot of stress. And stress is probably one of the main contributing factors to disease.
Oh, actually, a lot of ways, because you think about it, the divorce rate is normally financial. You have death is caused from stress a lot of times, right? So if I can show you how to be financially free, show you how to be financially independent, have time freedom, have full control of your schedule. To me, I was so stressed out when I found this company. Like, I was my heaviest weight. I was like, I didn't even know from one day to the next if I was going to even be able to eat, right? And then here I was, my mom was fighting for her life. And, I went out on a leap of faith. And a funny story, I actually told the lady, if you can show me how to make $1,500 a month, I'm all in. And I made $1,563, and I never left my mother's side. So there's ways to make money, even if you have zero time.
No, and that makes a lot of sense. Well, look, thank you so much for coming by and really sharing your story. I think not only is it going to resonate with a lot of people, because a lot of people are probably exactly where you are. Depending on what they made, it doesn't matter. If they're not sitting on a decent safety net, if they haven't saved anything for their retirement, it doesn't matter how much money they're making a year. They need to change their mindset. They need to get a plan in place, some income protection, and start really saving for their retirement. So would it be okay if you just quickly let everybody know an easy way to reach out for you? I'm going to put the details in the show notes so that if everybody isn't scrambling to write it down right now, they'll still be able to get in touch with you. But I just want to give folks an option, because you're talking some pretty big numbers here, Gigi. Like 85% of people don't have income protection. 72% of people haven't saved anything. Like, I think there's going to be a lot of people who are going to be rethinking their retirement strategy right now. And I want to make sure that they can get in touch with you.
Absolutely. Well, I would love to leave my office number for anybody that wants to contact me. My office number is 706-654-6409. You could actually email me at gigi.mcginnis@primerica.com. Or if you wanted to take a look at my website, it is www.primerica.com/Gigi McGinnis. And you actually see all my credentials, you see my license, you see everything there that my company offers. And you also have my contact information that way too.
Yeah. And thank you so much for sharing your great tips. I loved that you took everybody through the rule of 72, because it doesn't get taught in school. We need to be teaching this stuff in school, Gigi. We should be, when kids are 7, 8, and 9 years old, we should be teaching them how to save and manage their money and how important compound interest is. And instead, we're teaching them parallelograms, because you know how important that is during parallelogram season.
Yeah, absolutely. I tell everybody, when you graduate high school now, you're taught how to get student loans and credit cards. And what you should be taught is how money works. And because I can take a person I sat down with an 18-year-old yesterday and showed him how to be a cash flow millionaire by the time he retires, just by saving pennies. So that it's game changer if we start educating people early.
Yeah, we need to start people off on the right footing with, you save first, and then you spend what you have left over, not the other way around, right?
Absolutely. You want to save, save, save.
Great. Well, thank you so much for being with us today. And I really, I was inspired by your story, because you have definitely been through a lot. And it's very impressive that you were able to turn it around. And now you're able to actually help others to do the same thing. I think that is a really worthwhile and admirable calling.
Absolutely. And what an honor it was to speak with you.